You are sitting in a quiet room. Wall Street is not loud. The loud part of Wall Street ended around the time your father retired. The room you are sitting in has 8 monitors, 3 of which display nothing but rolling green text on a black background, and the other 5 of which display rolling charts that update faster than your eye can register the change. There is no shouting. There is in fact almost no speech at all. The man 2 desks away from you has not turned his head in 19 minutes. He is moving $4 billion. You will know that he is moving $4 billion only if he loses some of it. Because if he loses some of it, the small green LED on the wall above the door will turn red for between 2 and 7 seconds. And a sound that is not quite a chime will play from a speaker behind you, and then everything will go back to being quiet. Your code makes more money in a single morning than your mother made in her entire career as a public school teacher. You are 28, you don't exist on the firm's public roster, your name is on a tax document, and an NDA, and a building badge, and that is all. The firm has a website with a stock photo of a glass tower, and a sentence about long-term value creation. Now, you are not what the website is about, you are what pays for the website. Welcome to the room nobody knows is there. The smartest people on Wall Street don't trade. They don't even know what they're trading. They write the model. The model trades. The model is wrong about most things. The model only needs to be very slightly less wrong than the other models, very slightly more often, and the difference between very slightly less wrong and very slightly more wrong multiplied by 100 million transactions a day is a building in Midtown and a vacation house in Aspen and a divorce settlement. What you're actually trading is fear. Specifically, you are trading the difference between how afraid the market will be at 9:31 a.m. tomorrow and how afraid the market is right now. Your model has an opinion on this. The other firms have models with opinions on this. Your model needs to have a slightly better opinion, slightly faster, and the speed is measured in microseconds, which is a unit of time that does not appear in human experience. You did not set out to do this. Nobody sets out to do this. You set out to study physics. Level 1, the PhD. You are 23, you are at MIT, in a basement office shared with 2 other graduate students, working on a dissertation about the statistical mechanics of phase transitions in disordered systems. You will finish this dissertation, 3 people will read it, one of those people is a committee chair, one is your mother, and one is the woman who works in the dean's office and has read every dissertation submitted to the department for the last 16 years out of what she describes accurately as a personal hobby. You assume you are going to be a professor, so does everyone else in the basement, so do your parents who have been telling their friends for 9 years that their son is going to be a professor and who have already begun, in the slow private way of immigrant parents, the process of mentally preparing for the salary that comes with being a professor in the American system. They are bracing themselves to be proud and slightly disappointed at the same time. They have been doing this in increments since you were 16. Then a man comes to your defense. He's in the back row. He does not look like the other people in the back row. The other people in the back row are professors or graduate students or your mother or members of the woman from the dean's office's dissertation hobby. This man is wearing a polo shirt. The polo shirt has no logo. He has soft hands.
Congratulations, doctor.
You notice this because you shake his hand after the defense, and the hand is the hand of someone who has not done physical labor in his adult life. His hand has been holding nothing heavier than a phone and a coffee cup for 15 years. He hands you a card. The card has a name and a phone number and nothing else. No company, no title, no address. He says, "We read your chapter 4. Call when you graduate." Chapter 4 was about how systems with many weakly correlated noise sources behave near criticality. You wrote it in 11 days. It is the chapter you are least proud of because you wrote it fast and you know you wrote it fast. The man in the polo shirt does not know that you wrote it fast. The man in the polo shirt thinks chapter 4 is the only chapter that matters. 3 weeks later, you call the number. A woman answers. She does not introduce herself or the firm. She asks you to come to New York for an interview. She tells you to fly out of Logan on a Tuesday and to bring nothing. She tells you not to mention the trip to anyone, not because it is a secret, but because if you mention it to other physicists, they will ask follow-up questions and you will not have answers, and then you will sound like an idiot, and there is no upside to sounding like an idiot. You go. The interview takes 7 hours. There are 6 people. None of them ask you about chapter 4. They ask you to estimate on a whiteboard the number of golf balls that would fit in a school bus. You estimate. They nod. They ask you to estimate the number of dentists in the United States. You estimate. They nod, they ask you a question about a coin flipping game that has no obvious answer, and you spend 40 minutes on it and you get it wrong, but you get it wrong in an interesting way. They nod again. At the end of the 7th hour, the last person in the chair leans forward and tells you the salary. The number does not register. You hear it, but you do not understand it as a number. It is more money than your father has earned in the entire decade preceding this conversation. There's also a signing bonus. There's also a performance arrangement that they will not explain in detail because you have not yet signed an NDA, but which the man assures you will dwarf the base. You ask it if you can think about it. They say no, you can take 24 hours. After 24 hours, the offer is withdrawn, not as punishment, but because if you can't decide 24 hours, then you are not the kind of person they hire. They're very polite about this. The politeness is a kind of warning. You take a red eye back to Boston. You do not sleep on the plane. By the time you land, you have already, in some part of your mind that has not asked your permission, made the decision. Level 2, the intern. You spend the summer before your start date being trained in things you did not know existed, not physics. Physics is the part you already have. They are training you in the rest. You learn to use a Bloomberg terminal. You learn to read tickers, order books, options chains. You learn the difference between a market maker and a prop trader, and a directional fund and a market neutral fund, and a long-short equity fund, and a multi-strategy fund. And you learn that 90% of the people who use these terms in casual conversation cannot define them, including most of the people who manage money for a living. You learn that the market is not a market. The market is several thousand machines connected by fiber optic cables to several other thousand machines, all of which are buying and selling things to each other at speeds that no human reflex can match. Above this layer, there is a thin film of human beings whose job is to make it look like there are still humans in charge. The humans drink coffee, the humans go to meetings, the humans give interviews on cable television. The humans are, in a real and operational sense, decoration. You learn that the firm you work for has 6 offices and roughly 900 employees, and over the last 12 months has cleared net profits that, divided by employee, exceed the per capita output of every country on Earth except for 2. Both of those countries are city-states with offshore banking sectors. The firm is in effect a small wealthy nation with no flag and no army and a single product. Being slightly less wrong than the other firms, you also learn what your code specifically will do. Your code will take a feed of public market data, run it through a model trained on 20 years of historical price action, and output. Every several hundred microseconds, a number between -1 and 1. The number represents the model's estimate of which way a particular basket of stocks will move in the next 3 to 7 seconds. The estimate is accurate 51.2% of the time. You ask if that's enough. The senior quant who is showing you this, a man in his early 40s with a Stanford PhD and a face that has clearly not seen sunlight in some time, looks at you the way an adult looks at a child who's just asked why the sky is blue. Quote 3, he says. Quote 4, he is not joking. You will in time understand he is not joking. Level 3, the junior quant. You are 25, you have been at the firm for 2 years, you are no longer being trained, you are now expected to produce. The way you produce is this: you are given a quote 5, a small statistical edge that the firm believes exists in the market somewhere hidden in the noise. Your job is to find it, prove it, build a model around it, and if the model survives backtesting and risk review and stress testing, deploy it into production where it will trade real money for the firm. If the signal is real, you make the firm money, they pay you a bonus. If the signal turns out not to be real, you have wasted 6 months of your life and several $1 million of compute time. And the firm pays you the same base salary, but the bonus is smaller. And the next signal you are given is a less interesting one. The signals are interesting in the way crossword puzzles are interesting. They are clean little problems with clean little answers. The signal you are working on right now has to do with the way certain Asian commodity futures move during the 90-second window after the close of the London session and before the open of the New York session. There is a pattern in there. Several other firms have noticed there is a pattern in there. Your job is to find a slightly better description of the pattern than the other firms have, and to find it before the pattern stops working, which it will, because every pattern in this business eventually stops working. You sleep 5 hours a night, you eat lunch at your desk, you have a girlfriend technically, although you have not seen her in 11 days, she lives 40 blocks away. She works at a publishing house. She has begun to develop the slightly distant tone of a person who is in the early phase of figuring out that the relationship they thought they were in is structurally different from the relationship they are actually in. You will notice this in approximately 3 months. By then it will be over. The signal works. You write the paper, you run the backtest, you pass risk review, you deploy into production. The model makes the firm $47 million in its first quarter. You receive a bonus that exceeds your base salary by a factor of 3. You buy nothing. You do not know what to buy. You move the money into a brokerage account. The brokerage account suggests an asset allocation. You accept the suggestion. The money sits there, growing untouched, like a houseplant your roommate is taking care of for you. You do not call your parents to tell them about the bonus. You do not know how to. The number is so far outside the financial vocabulary of your family that it would not register as money. It would register as a story about money, and your mother does not like stories about money. So you say nothing. You send a card on her birthday. You wire enough into their account anonymously to pay off the mortgage, and you tell them it was a refund from a tax error. Your father, who is a tax accountant in the country he came from, knows it was not a tax error. He says nothing about it. This is the second lie the job has made you tell your own family without opening your mouth. The girlfriend leaves. Level 4. The senior quant. You are 29. You have your own desk in the algorithmic trading group. You manage a model that runs unsupervised and makes decisions on roughly $250 million of the firm's capital and reports to you, only to you, every Monday morning in a one-page summary your assistant prints out and leaves on your chair before you arrive. The model is not the model you wrote at level 3. The level 3 model was retired 18 months ago when the pattern stopped working. The new model is more sophisticated. It uses machine learning techniques that did not exist when you were getting your PhD, trained on a dataset that the firm has spent $200 million assembling over the last decade, including alternative data sources that you are not allowed to discuss with anyone, including in some cases your own colleagues. You know things now that you wish you did not know. You know that the firm has a feed of satellite imagery of every major commodity port on Earth, refreshed every 6 hours, processed by a separate team of computer vision PhDs into a number representing the rate of container movement. You know that the firm pays for credit card transaction data covering roughly 40% of American retail spending, anonymized in a way that the firm's lawyers have signed off on, but which a privacy researcher would find interesting. You know that the firm has, in 2 specific countries, an arrangement with a telecom provider that provides aggregate cell phone movement patterns near specific factories, which the firm uses to estimate production volume in industries where the official numbers lag by 60 days. None of this is illegal. All of this is, in the precise sense, the firm's lawyers use the word legal. The lawyers use the word legal the way a surgeon uses the word viable. It does not mean good, it means survives the operation. You have not had a relationship in 18 months. You see your therapist once a week on Tuesdays at 6 p.m. and the therapist's office is on the way home from the office, and you go because the firm's HR program covers it, and you talk for 50 minutes about whether you are happy, and you both reach the same inconclusive answer every week, which is that question doesn't quite parse anymore. You don't know whether you are happy. You know that you are very, very efficient. The therapist suggests these are not the same thing. You agree. The agreement does not result in any change of behavior. Your code is more regulated than you are, and less understood by the people who regulate it. The 11 minutes. It happens on a Wednesday in March. You are not sure what you ate the day before. You will later have to ask your assistant because the SEC is going to want a timeline. The model takes a position at 10:47:23 a.m. Eastern. The position is large. It is not unusually large. The model is allowed to take positions of this size on its own authority within a defined band of market conditions, and the conditions at 10:47:23 are within the band. The model is acting correctly. At 10:48:41, a tweet is posted by an account that the model's natural language processing layer has classified as __quote_8___. The tweet contains a typo. The typo process put through the model's sentiment classifier registers as a much stronger signal than it actually is. The model adjusts its position. The adjustment is also within the band, technically. The adjustment is also in retrospect exactly the wrong direction. At 10:49:12, the market moves against the position. The model doing what it is designed to do adjusts again.
Sell everything now. Get out of the market.
The adjustment makes things worse. The model doing what it is designed to do adjusts again. The adjustment makes things worse again. You see the green LED above the door turn red at 10:50:08. You do not, in the moment, react. You have seen the LED turn red before. It always turns back. It always turns back within 5 seconds. At 10:51:30, the LED is still red. At 10:52, the firm's automated risk system pages your director, who is in a meeting on the 44th floor. At 10:53:14, you are aware that something has gone wrong. but you do not yet know how wrong because the position summary on your screen is updating in a way that suggests numerical errors in the display rather than actual numerical truth.
It's an emergency.
The number
We
you're
need
looking
help
at has
now.
too many digits
I've
to be
tried
real. The
rebooting,
number
nothing
is
is
real.
responding.
At 10:58:11, your director is standing behind you. He is not speaking. He is looking at the screen. The model is still trading. The model is doing exactly what it is designed to do. Nobody has flipped the switch that stops it, because flipping the switch in this kind of moment is itself a decision with consequences, and the people who make that decision are still ascertaining facts. At 10:58:43, somebody flips the switch. The position is unwound over the following 2 days. The total loss is $41 million. This is a survivable loss for a firm that clears what your firm clears in a year. The loss is not the issue. The issue is that the model did exactly what it was supposed to do. The model is not broken. The model is correctly built, correctly tested, correctly deployed, and correctly responsible for losing $41 million in 11 minutes. You will spend the next 4 months in a series of meetings explaining this. The lawyers will explain it to the SEC. The SEC will explain it back to the lawyers. The lawyers will explain it to internal audit. Internal audit will explain it to your director. Your director will explain it to you. You will explain it to nobody, because there is nobody in your life with sufficient context to receive the explanation. You don't remember what you ate the day before. You don't remember what you ate the day after. There are 11 minutes in your life that you can describe in microsecond resolution, and 7 days on either side of those 11 minutes that are simply gone. The firm does not fire you. The firm gives you a small promotion. This is not a reward. This is a calculation. The firm has spent 6 years and a substantial sum training you to be the kind of person who can look at the 11 minutes and understand exactly what happened. There are perhaps 200 such people in New York. The firm has 11 of them. Replacing you is more expensive than absorbing the loss. You receive your bonus that year. The bonus is smaller than it would have been. It is still more than your father has earned in his entire life. Level 5, the portfolio manager. You are 31. You have your own book. You manage $300 million of the firm's capital. You have 3 quants reporting to you, one of whom is 25 and has the look of a man who has not slept in a number of days that he himself has lost track of. You recognize the look. You do not say anything about it. You have a corner office. You almost never sit in it. You sit at a desk on the trading floor, the same kind of desk you sat at as a junior, because the corner office is too quiet and too far from the screens, and you have learned that you make worse decisions when you cannot see the screens. The corner office is for visitors. The corner office is for the rare moment when somebody from another firm comes to talk to you in person about something that cannot be put on paper. You have an apartment in Tribeca. You bought it 2 years ago. You have not decorated it. There is a bed and a couch and a refrigerator that contains 4 bottles of sparkling water and a half-eaten container of takeout from a place you cannot remember ordering from. You sleep there on most weeknights. On weekends, sometimes you go to your other apartment, which is in the Hamptons, and which you also have not decorated, and which you visit because your therapist has suggested that having access to nature improves quant outcomes. You drive the 90 miles each way alone in a car you bought on the recommendation of a colleague, and you spend the weekend sitting on a deck looking at the ocean and answering email. Your parents do not know what you do for a living. They know it has to do with finance. They know it pays well. They know you cannot come home for Christmas because of regulatory windows you have invented to avoid the 4-hour conversation about cousins and uncles and the woman from your old neighborhood who has been asking about you for 9 years. Your mother has stopped asking when you will marry. Your father has not started asking. They have moved into a posture of careful incuriosity. It is the same posture they took, you remember now, with your uncle who came back from a war and spent 40 years not talking about it. They are not the same situation. The posture is the same. You sit at your desk on a Tuesday morning. The market is closed, though you are reading internal research about a new strategy your team has proposed. The strategy is interesting. The strategy will, if it works, generate $8 to $12 million in alpha per year. You are reading the 3rd page of a 14-page memo, and you notice, somewhere in the back of your mind, that you have not laughed in approximately 2 weeks. You don't say this to anyone. There is nobody to say it to. The therapist is on Tuesdays at 6 p.m. and you will mention it then, and the therapist will write it down, and you will both continue with the conversation that you have been having for 3 years, which is approximately the same conversation conducted from very slightly different angles each week. The flat where time stopped. You are 35. You have been doing this for 12 years. You have in the brokerage account that started growing untouched at level 3, somewhere in the neighborhood of $40 million. You also have the apartment in Tribeca the house in the Hamptons, a flat in London that you bought because of a tax structure your accountant explained to you twice and which you still do not fully understand, and a portfolio of art that you bought on the recommendation of a consultant and which is stored in a bonded warehouse in Geneva because the insurance is cheaper there. You have not ever opened the boxes the art is in. You do not know what most of the art looks like. You receive a quarterly report on its valuation. The valuation is going up. You are not unhappy. You are not happy. You are something else, which is a state that the language for happiness and unhappiness was not designed to describe. The state is closer to quote 10 you have, by the relentless application of optimization across a dozen years, arrived at a global minimum on a lost surface whose objective function you no longer remember choosing. The minimum is comfortable. The minimum has a view of the river. The minimum has a personal trainer who arrives at 6 a.m. and a chef who arrives at 7 and a car that arrives at 8. And the minimum has, when you stop and think about it, which you have learned not to do, exactly nothing in it that you did not have at 23 except for money. You see your parents twice a year now. Christmas, Mother's Day. The conversations are brief. They love you. You love them. They do not know you. You do not remember when this became true. You are not sure it was a single moment. You suspect it was a slow drift between the lines of an estimation problem you never noticed yourself solving. The smuggler in our last episode moved a stone from a river to a boutique. He walked it physically across borders, inside a body. The stone gained value at every step because each step required a different human being to risk something specific. You move nothing physical. You move numbers on a screen faster than any human can react. The numbers gain value at every step too. The risk has been moved into the model, which, unlike a human being, does not feel it. Somewhere in a basement office at MIT right now, a graduate student is writing a chapter 4. The chapter will be the one she is least proud of because she will write it fast. A man in a polo shirt will read it. He will fly to her defense. He will hand her a card. The card will have a name and a phone number and nothing else. She will go. She will not know what she just signed up for either. The model is patient. The model can wait. The model has, by definition, no body. The next person doesn't move numbers. He moves money that already exists. Too real, documented, trackable. His job is to make it look otherwise. He doesn't make 8% the way you make 8 basis points. He makes 8% on volumes that would, if you saw them on a screen, register briefly as a numerical error. Video number 16 structure, F hook, type 3 finale, type 3 finish type, Chorna Ironia temperature, C author role, обвинитель duration main 22, word count 4185, series back, smuggler moves a stone with his body across a border, quant moves nothing, numbers on a screen. The risk is in the model, which doesn't feel it. Series forward, he doesn't move numbers, he moves money that already exists. His job is to make it look otherwise. Series underscore link underscore form, to content underscore plan underscore ID, 16 publish underscore date, May 5th, 2026, title underscore final, your life as every level of Wall Street quant, hero gender, male start location, office / комната серверов, final location, квартира без времени, final state, черная ирония, sensory marker, mind / cognitive normal чи life marker, родители, дефис careful дефис curiosity level, нижнее подчеркивание n, нижнее подчеркивание used, двоеточие, true level, нижнее подчеркивание n, нижнее подчеркивание direction, двоеточие, восходящее irony, нижнее подчеркивание count, двоеточие, 4 cases, нижнее подчеркивание use, двоеточие, generic дефис renaissance, дефис citadel, дефис MIT, thumbnail, нижнее подчеркивание template, двоеточие t, 1/t, 3/t, 5 thumbnail, нижнее подчеркивание bg, двоеточие, черный / бело-черный